Good day, everyone. Good day, ma'am. I'm Elaiza Taculod from BSHM2P, and right now I'm going to report the Chapter 13 Organization for Administration and Control. No business runs itself. It needs repeated stimulation. It is not easy to build a business. It takes time, intelligence, and hard work. A business will run smoothly only if proper attention is given to it. And yeah, that's true. Running a business is not easy because it takes a lot of time, intelligence, patience, and hard work. That's why a business will run smoothly only if you give a proper attention to the business that you want. So a group of arranged machines, a body of unarranged workers, and a pile of unassembled materials do not make going concern as to what is to be produced, to whom it may be sold, who is to do each part of the work, when the goods are to be finished, whether the quality is satisfactory, how money is to be collected out, and how to settle a wide range of problems. All of this must be administered and controlled. So we have here the administration and management. So the function of administration and control is to keep the business going smoothly, to supply the necessary stimulus and direction, and to look ahead for possible opportunities as well as danger signals. The act of administration refers to establishing and maintenance of major policies, while management refers to the carrying out and implementation of those policies. Management problems. Management problems may be groups, namely, the first is the problem of policy, which involve the setting of major objectives and formulating plans of action for their attainment. The second is the problems of organization, which involve the classification of activities into administrative groups, fixing responsibility for the performance of each group, and providing for the performance of each group, and providing for the proper coordination of all the groups in order to cooperate effectively in the attainment of the objectives. The third is the problem of personnel, which involve the procurement, development, and the use of individuals to perform the responsibilities established with the organization plans. The fourth is the problems of facilities, which involve the procurement, maintenance, and use of the physical factors needed in the performance of operations necessary in the attainment of the objectives. And the fifth is the problems of method, which involve the establishment and use of routines, procedures required to perform effectively the operations necessary to attain such objectives established by the policies. So we have here the meaning of control. The following are taken from E. Robinson Business Organization and Practice and from Davis Stretson Office Administration, published by Alexander Hamilton Institute. Control may be understood if it is broken up into several aspects of knowledge. So the first is knowing exactly what work is to be done, as to quantity and quality, as to time available. The second is knowing what resources are available for doing the work, as to personnel, as to materials, as to equipment, and as to other facilities. The third is knowing that the work has been done or is being done with the resources available, within the time available, at a reasonable cost as compared with standard cost, and in accordance with the required standard of quality. The fourth is knowing immediately of any delays or variations as to the happening, as to the cause, and as to the remedy. The fifth is knowing what is being done to remove such hindrances, as to who is doing it, as to how he is doing it, and as to when it will be done. The sixth is knowing when it is done, as to time finished, as to quality of the finished job, and as who did it. The seventh is knowing that recurrences are guarded against, in what way, by whom, at what cost, and with that system of inspection. So we have here the elements of control. Control, in order to be effective, must be afforded with necessary elements such as authority and knowledge, guidance and directions, constraints and restraint. To exercise control, the manager must be able to know what to do to bring the situation into line. Equally important is to have authority to undertake necessary and appropriate action in the execution of control. The manager therefore must have his lines of communication established open and established often established, open, and functioning. In every management problem, there is present a multitude of elements and conditions. Some of these are desirable and which the manager would like to retain. Others are undesirable and have to be eliminated or discarded. Controlling, therefore, is the conscious directing or influencing of certain uses of certain causes so that certain desired result could be effective. So next, as we have here, the administrative controls. A basic task of management has to do with control. Together with planning, organizing, coordinating, and directing, control is one of the functions of the management. When management introduces rules and regulations, standard operating procedures, and standing orders, and when it sees to it that these are followed in order to attain the company's objectives, it establishing and enforcing controls. Production control, earlier discussed under manufacturing, is a form of administrative control, so is inspection. The most common form of administrative control, however, is budgeting. So the budget. The budget is a collection of estimates of income and expenditures for a future period based upon past experiences, present conditions, and anticipated future trends. The budget is a tool of management whereby it hopes to achieve the higher reasonable expectation of operating efficiency. The business budget, being a tool of management, is only as useful as the care which it is prepared and the manner it is followed. It makes management regularly study financial conditions, the market of the company's products, and properties of the general market, and points out disruptive or unusual elements that must be given careful attention. It brings about a coordinated use of system of accounting, books, records, and the finding of research. A budget may cover a single item of expense such as the advertising budget, or it may cover an inter-department's activities such as the sales budget or the purchasing budget. When the term budget is used singly, however, it usually refers to the entire budget of the business enterprise. The budget may be prepared in terms of months or quarters or for a year. It should be long enough to include complete cycles of volume, of seasonal fluctuations of volume, production, merchandise, turnover, and financial operation. In the preparation of a budget, the president or general manager usually calls a conference of all top executives or department heads. The general plans for the coming budget period are taken up. The conference discusses changes in company policy, after which important changes in department policy are made known to the rest. In preparing the separate budgets of departments, the sales budget is usually attended to first. This is because the largest part of the income of any company comes from sales, and the forecast of sales for the coming budget period will form the basis of the other departmental budgets. So sometimes a sales expense budget is prepared separately. The cost of maintaining the sales department, salaries, overheated, and the like are included. So sales promotion may be part of sales expense. If important enough, it may also occupy a separate, and the like are included. So the production budget is secured to meet sales requirement. So what are the physical quantities to be produced? So how much finished goods are on the hand and how many should be on hand at the end of the period? So what are the physical requirements of the plant? How much production can company finance permit? So all these questions have to be answered. So the production budget enables maintenance of an even rate of production and cuts production costs. Timing and schedules are attended to. So in preparing the purchase budget, inventories are checked and production requirements, both as to volume and as to value, are carefully studied. So the finance budget gives probable income and expenses over the whole period to enable management to see the overall financial picture and arrange for loans or other resources of finance. So the business budget must be continually compared with actual performance. Once the budget period gets underway, it should be adaptable and permit revision not originally foreseen. Next, as we have here, the government controls. So business in the Philippines is essentially characterized by free enterprise, by free enterprise but with many elements of government control. The business enterprise and the company as a whole are subject to a pervasive and comprehensive scheme of government controls. So government control may consist of regulatory agencies such as the Securities and Exchange Commission, the Public Service Commission, the Patent Office, and the Insurance Commission are quite well known and exercise familiar functions. So the government enforcement of pure foods laws, labor laws, social security legislation, anti-monopoly laws, and even tariff, customs, and revenue codes is an example of government control of business. Public control may become more direct when a government agency invests sizable amounts in a business or buys it outright. Loans from government financing institutions are often accompanied by government official settings and meeting or boards of directors of private corporations. So we have here the accounting controls. So accounting has been defined as the collecting, summarizing, analyzing, and reporting in monetary terms of information about the business. Accounting also provides information for two distinct groups. It gives information on the company finances to stockholders, government office, creditors, banks, and other outsiders. As a tool of control, however, it gives information to management to enable it to realize the company's objectives. As a tool of control, accounting communicates to all personnel in concrete terms of pesos and centavos just what management wants the employees to do. It motivates personnel and enables review or checking up of their efforts and activities, a special branch of accounting. Cost accounting enables effective operations based on accurate cost information. So lastly is we have here the importance of controls. Controls give the usual advantages of planning. Ways, inefficiencies, and dishonesties become known and may be easier avoided. Controls brings out conditions which otherwise would remain unnoticed. More important, future problems are provided for, since controls are intended to keep an enterprise focused on its objectives, goals, and objectives are formulated in clearer and more concrete form. Controls increase initiative, bring about coordination, and promote cooperation. And that's the end of my report about this chapter. Thank you and God bless.